All right, you're seeing the visuals of the listing ceremony of Prince Pipes. This is the last listing of this calendar year, and as the grey market was suggesting, it is listing at a discount at 154.55 is where the company has made its debut on the stock exchanges. Remember, the issue price was somewhere about 178 rupees. Subscription was also tepid. The issue was subscribed just about 2.2 times, and with this issue, companies raised about 500 crore. And the reason for tepid listing has been the promoter stake is pledged as much as 35%, and also there are some outstanding litigation which did not go down well with the investors, and that's precisely the reason why you are seeing a tepid listing in fact at a discount of about 150 of about 12%. The stock's at 155 or 156.
Well, there you have it. Not the best of listings that we've seen of late, definitely not one in comparison. But on that note, let's also take a look at the headlines that we are tracking at this hour. Well, markets begin the trading week on a positive note. The Nifty trades around 12,300 and the volatility index snaps a 4-day losing streak. Open interest is rising in PVR and Bata towards fresh longs. Gateway Distripark trades with gains after the company will sell its entire stake in Snowman Logistics to Adani Logistics. And Prince Pipes and Fittings lists at a discount to its issue price of 178 on the stock exchanges.
Okay, so those are your top headlines at this hour. Let's quickly tell you what's happening with the markets. Today is the second trading day of the January series. And remember, we've started this series with a bang. More markets were up nearly 1% on Friday. And of course, they've been trading around the mark of 12,250. 12,300 remains a key resistance level for Nifty. Sensex also up about 40 points in trade. And Nifty Bank, which closed at record high levels on Friday, continues its up move today as well, as the index is trading with gains of 100 points. Remember, on Friday, there were huge positions being built up on Nifty Bank. The open interest went up by about 25 to 26%. So let's just pull up the futures and check if there is any more open interest build up seeing in the opening session. Of course, the premium is quite huge right now of almost 180 points on Nifty Bank. Open interest plate should also come up on your screen. While volatility, which we highlighted in our headlines, 5% higher at the start of the session. OI up for Nifty Bank. India Wix has been trading at its 7-month low. So today there are some gains coming by, but still I'll say levels of 11 to 12 is something which should not irk the bulls at all, because 12, 13 are comfortable levels, at least if the markets has to see fresh buying at current levels. In terms of sector, you've got the broader markets as well. By the way, we are seeing gains for both mid-cap as well as the small-cap indices. So good going, which also means that the market breadth has been positive, at least in today's session so far. If this momentum continues or not, we'll have to monitor. In terms of levels, as we mentioned, 12,300 is a resistance mark. So open interest distribution for this Thursday's expiry, 12,200 put, 12,300 call are the strikes. It's a very, very narrow range. And remember, there were weekly expiries seen just 2-3 weeks back as well. We were only looking at this range, and that continues for this week's expiry. So 12,300 call is added, the maximum so far 7 lakh shares, while there is put writing visible even on the 12,300 strike. Remember, we've not surpassed that level, but almost 8 lakh shares have been traded. So I guess the fight will be between the bulls and the bears for the 12,300 marker gum.
Absolutely, and we'll be watching out for those levels. Let's also very quickly take a look at all the stocks which are in focus on the back of an increase in open interest. And there will be quite a few today, because we are looking at a fresh start to a very, very new expiry of late. So we do have PVR, which is right at the top of the list, which is gaining its at-life highs. And besides that, we are also keeping an eye on Mindtree, which is also up and about, advancing. Bata India is the other one, which is also seeing a surge in open interest, along with buying coming through. And in fact, all these stocks are advancing and seeing an increase in OI towards buying coming, or as far as futures go. Jubilant Foodworks and SRF, among others. The spot hasn't moved for either, for Jubilant Foodworks or SRF for that matter, but there is an increase in OI, so we'll be watching out for those as well. Not too much to speak for as far as unwinding goes, but Apollo Hospitals and Ambuja Cement are looking at a drop around 3.5% to 7.5% in open interest.
Okay, but as of now, Agam, let's focus on the new kid on the block, and that's Prince Pipe and Fittings, which had a tepid debut, on the bourses. The stock has listed at a 13% discount to its issue price of almost 178 rupees. Yash Upadhyay spoke to the company's executive director, Parag Sheda, and CFO Shyam Sarda about the company's growth prospects and also plans to fund the proposed capex. Listen in.
The last 2 years, I think the company has been growing to about 12 to 14% in terms of value and volume, and based on the growth drivers, which is the substitution market, be it for the agriculture, for the 100 smart cities, housing for all, based on various parameters. We see that the growth shall continue to the levels of 12 to 14% year on year.
But sir, coming from an industry which is heavily dependent on how the real estate sector behaves, and we've seen over the last several years the amount of stress that the real estate sector has been in, what gives you this confidence that you will be able to do a 12 to 14% growth going forward then?
So that's right. That's true that real estate has not been very exciting in the last 2 years. But what we have seen is post demonetization and GST, there has been a good shift from the unorganized to the organized, as well as what we see that within the organized sector, the big players, the top 5, are becoming bigger and bigger. So we shall continue to see this kind of a momentum for the coming times.
I would like to ask this question to Shyam as well. Sir, we understand that a large portion of your raw material basket does come from crude because of crude derivatives being used for polymers which are used in pipe making business, and we've seen that over the last couple of years the crude oil environment has been largely benign, and that has aided the margins of most of your peers as well. But when it comes to your company in specific, we've seen that they've been largely stable or mostly in a range. Going forward, how do you look to expand your EBITDA margins, and what will be your plan? Are you looking at coming out with newer products in the high margin business, or what sort of a plans do you have in terms of expanding your margins?
Yeah, so basically in terms of the raw material consumption, it is basically a function of, when you talk about the margin, it is like 68 to 70% is the raw material cost. And in our trade, what is unique is basically it gets passed on either way. If there is an increase or if there is a decrease, either way it is passed on. Generally, it has been seamless so far, unless there is an abnormality, and depending on the stock level positions, what could either increase or decrease. But to maintain our EBITDA margin, as we have seen in the last couple of quarters, because of the consolidation happening in the marketplace, there has been instances where even if it is an increase of maybe even X percentage, we have been able to increase it maybe slightly more than that. So that is being seen in the margin as well, and even going forward, we believe we should be able to maintain the margin, which is around 13 to 13.5%.
One more question, and this is again coming from one of the brokerage reports that highlighted the fact that there are concerns over the promoter pledge and related party transactions. Any clarity that you could give with respect to that?
Yeah, so with relation to the promoter's pledge, which is as of now around 35% placed with one lender, we are pretty confident that is going, we are paying off in maybe 1 or 2 working days, and once that gets off, I think 100% of the promoter pledge will get unreleased. And as regard related party transaction, while the company was 100%, practically the full equity of the company was held by the promoters prior to this listing, so there has been a few instances of related party transaction, which we now believe, in the last at least 1 year, there has been not any significant transactions, and even going forward, we are quite sensitized to the transaction. We are now getting listed, so these things will, of course, will not happen in future. There will be no much of a related party transaction going forward.
And sir, if also can you give us a sense of what is the existing or the overall debt on the company's books right now, and the working capital days that you're operating at?
So in terms of the net working capital, we are operating around 40 days, which is net of our debtors and inventory and the creditors part of it. And in terms of our net debt position, is close to around 290 odd crores as on date.
All right. So then you are also looking at coming up with a new facility in Telangana, which would augment your overall capacity by almost 51,000 tons per annum. How are you looking at funding this this capex plan? And also, can you share some more details with respect to when this plant will be coming on stream and the kind of revenues that it would be able to generate?
Sure. So, we understand that, in our industry, logistics cost plays a very vital role. And in order to, work on the logistics cost, the company has decided that we need to have a manufacturing footprint in the southern region. So, all our products currently, the fittings, all the injection molding fittings are coming from our Haridwar plant. Now, through our IPO proceeds, we intend that in the next 12 months, we should be able to start our Telangana plant, which will improve our footprint in the southern region.
Okay, there you have it. That's the management of Prince Spikes assuaging a lot of concerns with respect to some of the problems and some of the challenges that the company faces. It's not been the best of listings, but again, we'll continue to keep an eye on how this debut has come through the course of the day. Now, it's time to get in our experts for today, but before that, here's a reminder. If you have any queries regarding futures and options markets, you can call us on 022454044141. And of course, the easier way to approach us would be to write on Twitter, Facebook and YouTube with the AskPQ hashtag. Today we have with us Amar Singh of Angel Broking and Navneet Daga of Yes Securities joining us on the show. Good morning to both of you. Thanks for taking the time out. Navneet, I start with you. Where do we go from here? Do you expect some amount of resistance for the benchmarks, considering we already have seen some amount of strength of late?
Well, good morning. To my understanding, it's looking likely that the kind of comeback that we have made in last 2 days, it's give you confirmation that this broader channel is being now looking likely that it can expand on the upside, and the greater chances that we have the comfort that I'm coming out from the kind of levels that we are on the VIX that we are trading, and the kind of input writing activity that we are seeing in the last 2 days is giving me confidence in saying that basically this now the up move is likely the greater chances that an up move would extend towards the levels of somewhere near to 12,600 levels on the upside, and there's a chances that any possibility dips towards the 12,100 is likely to be getting bought into. So to my understanding, being in the long bias in the market with relatively buying up the cheaper put protection would be a good strategy in this kind of a market setup.
So keeping that in mind, Navneet, you're advising a bull call ratio spread on Nifty. Take us through that.
Well, look, the kind of frenetic put writing activity that we have seen at 12,200 levels in the last couple of days, giving me a sense that basically this level is likely to be defended in the next coming days. So what I'm suggesting for the monthly series, since it's a long monthly series, one can still initiate a long bull call ratio spreads, buying an at the money put call options at 12,300 levels for the monthly series, that is for 30th of Jan. And simultaneously sell 2 lots at 12,600 calls. The current spreads would be in the range of somewhere near 75 to 80 points. And I expect that the markets move towards the 12,500 to 12,600 zone. There's a greater chances we make the maximum out of the strategy. And I'm keeping a target in the price range somewhere near to 200 points in the strategy. And the stop loss levels would be around 20 points on the total outflow.
Okay, for those who don't know what a bull call spread is, it's employed when one expects a moderate up move in a security, and in this strategy, a call option of a certain strike is purchased and a call option of a higher strike is simultaneously sold. Of course, in this case, we are going to continue to track this one, but Amar, good morning to you as well. How are you seeing things pan out for the benchmark indices?
Yeah, very good morning. We've been on the bullish side, which we've been speaking earlier also, because what we're seeing is that the trend definitely remains positive and on the upside. We did witness on the expiry day some correction, but again the next day there was a major up move. Overall, the trend remaining in favor of the bulls, and I would say that dips definitely should be used as buying opportunities, and If you look at Nifty spot, it has got good support coming around 12,150, 200 odd levels. So ideally, any buying should have a stop loss below these levels. Whereas on the upside, resistance is seen around 12,350 odd levels. So the bias is towards the upside, and the bulls definitely seem to have the better hand currently. And talking about the bank Nifty also, we are witnessing, even if we look at the daily charts, we are seeing now that the trend which was towards the few days back, it was trading sideways, and there was some bearish divergence, but overall weekly and long-term charts are positive. Even now the daily charts have turned positive, so definitely any dip should be used as buying opportunity. As far as bank Nifty is concerned, on the spot, support comes around 32,250, 300 odd levels, whereas resistance on the upside is seen around 32,700 odd levels.
Okay, I just want to add in a small correction in terms of the explanation, because Navneet has suggested a bull call ratio spread, and that means that he's selling 2 lots as compared to one which happens in a regular bull call spread. Yeah, there you have it. So to very quickly reiterate, he's buying the 12,300 call and selling 2 lots of the 12,600 call. That was just the correction that I needed to make in terms of defining that ratio there.
Okay. On that note, let's also bring you some stock-specific strategies from our expert. Amar, I'm going to come back to you in terms of individual stock futures. What are you recommending in trade?
Yeah, I would say one can look at Berger Paints. That's the first stock one can look at. Because if you look at this stock, the stock has been doing is that the stock was consolidating and finding very strong support around the 500 odd levels. And technically, if you look at the stock on the long term as well as the intermediate term trend, that continues to remain positive and strong. And we've seen some correction in the stock from almost 525 levels, currently trading around 516. So these are levels to enter the stock on the long side with a stop loss of 497 and a target of 543 on the upside. And the second stock to look at is from the IT space, and that is NIIT Technologies. What we are seeing here is that this stock is extremely strong on the short term as well as the intermediate and the long term charts. We did witness some profit booking in the stock, but this stock is close to a buying opportunity and very close to crucial support. So buying around the current levels, 1590 odd levels, with a stop loss of 1543 and a target of 1674 in the short term.
Okay, so Amar is looking to go long on Berger Paints as well as NIIT Technologies. Navneet, what about you? What stocks are looking interesting to you this morning?
Well, there are 2 stocks again from the buy side. One is long call on Havels. It's a mid cap one which has formed a multiple bottom around 630, 635 odd zone, and has seen some kind of a retracement from that levels. And there's the chances that the momentum is likely to add up onto the stock, and one can still initiate to be on the long side. With now 640 as a future stop loss for the Chan futures, and can still possibly play for the target on the upside somewhere in the range of 700 to 705 for this entire series. The second stock would be on the long side would be on from the large cap space, Axis Bank. The stock was firmly in that consolidation zone, was in the range of 720 to 750. And it is firmly break out of the range, and it's looking likely that this is a one stock which can take the bank Nifty higher along with it on the upper side. And to my understanding, one can still initiate to be on the long side. I'm looking at a possible target somewhere in the range of 810 for the Chan futures, and keep a strict stop loss on the lower side at the 740 odd levels. That's where the trend is likely to be reversed from this counter.
Okay, so 4 long calls coming in from our experts. On that note, let's also tell you which are the stocks that we will be taking views from our experts. On top of the list is PVR, a stock which has been witnessing fresh long positions. Even on Friday, the stock moved. In fact, the stock has been trading at record high levels. The other one is in focus post the deal. That's Adani Ports. After the company has acquired 40% stake in Snowman Logistics, those stocks just up about 0.5% in today's trade. And lastly, you've got Page Industries, which moved 4 to 4.5% higher on Friday, and the stock's now trading above its 50-day moving average. So let's begin with PVR Cinemas, which is trading at record high levels. Amar, from these higher levels, do you see the stock moving to levels of about 2,000, or if somebody has been holding long positions here, should you advise them to book profit now?
Yeah, looking at the PVR chart, one can clearly see that the trend definitely remains strong and positive, and also what we are seeing on the short-term charts, because first of all, the first indication comes on the short-term charts, and what we are seeing on the short-term charts is that the bullish momentum for PVR continues to remain strong and firm, and even the weekly and the long-term, that's the monthly and longer-term time frames are clearly indicating that there is a strength to the stock. So ideally, one can hold on to one's position, and if were to have a stop loss, because if we look at I would say 25th September, it had made a high of almost 1900 odd levels. From 1897, it had corrected all the way down towards 1655 or so, 1695. So clearly that's so what it effectively means is that somewhere around 1900, 1910, 15, 20, I would say 1900 to 1920 could be a zone of resistance for the stock. So if it sustains above that level, then yes, you are right, it could head towards the 2000 mark, and technically the charts are indicating that there is bullish strength in the stock, but at the same time the stock is in overbought territory in most of the time frames. So ideally one can hold on to a position with a stop loss below 1856 levels.
Okay, well, from there on, we move on to Adani Ports and SEZ. Well, the thing about, of course, it's in the news because it's bought over, as in the Adani Group, along with the Ports and Logistics Company, has bought over Gateway Distriparks, Snowman Logistics, and this acquisition has certainly led to gains in Gateway Distriparks. But let's take a look at what it's done for Adani Ports and SEZ. Now, it is advancing not as much, but its open interest is up as much as 2%. Perhaps a tougher stock to trade, considering it's possibly a little more challenging to discern a trend as far as Adani Ports is concerned. That said, there's still a lot of traction with respect to futures and options in general overall. So, Navneet, the question to you is, how would you trade Adani Ports right now? Leaving aside all the news, what is the technicals telling you and the futures and options variables, if at all, in terms of trading this one?
This stock has been in a very tight band of 360 to 380 zone, and giving you looking at the RSI confirmations trading somewhere in the range of 45 to 50, it's giving you signs that there is no major trading bias out there, neither on the long side, neither on the short side. That the best way to trade it is like at this point of time, either you buy at the support zone somewhere in the range of 360 odd, and you possibly take a bet above that confirmation of the closing sustained about 380 zone. So to my understanding, it would be kind of a conditional trade rather than being having a predefined mindset to being on the long side or the short side. One need to patiently wait for a level somewhere into 360 or either to a breakout above the 380 zone. But overall suggests to me that until unless 360 is not been taken on, that the greater chances on the upside breakout is much more possible.
Okay, that's Adani Ports for you, trading at levels of 365. The other one is Page Industries, which is seeing a rise, at least in the last two sessions. The stock's up for the third straight day today. It's also trading above its 50-day moving average. And of course, as we've been highlighting, long positions were seen even on Friday. And today, the stock spot has not moved much. And in terms of open interest, no fresh build-up is coming about. But the futures are trading at a premium of about 130 to 133 points. Amar Singh, not a very liquid counter beat even in the futures space, but looking at the stock movement, would you advise taking any bet here? What are the key levels that you would monitor in the charts?
I recommend buying at the current levels, because if you look at the stock technically on the long-term charts, it continues to trade sideways, and what we witnessed, the rally on Friday was a sharp rally for the stock. However, what we can say is that now the stock definitely seems to have formed a very strong support base coming around 22,000, 22,200 odd levels, because that's a major support level where the stock had taken support around November and then in the second week of December. However, looking at the upside, I would say the stock does have a strong resistance coming at around 24,600, 700 zone, because that was a recent top which the stock had made. So I would recommend that rather stay away from the stock. And yes, if there is a correction towards 22,300, 400, ideally those levels could be, one can look at initiating long, not at the current levels.
Okay. Navneet, you made a mention of Axis Bank. I'd like to take up Kotak Mahindra Bank with you as well. After moving above the mark of 1700 recently, it is now hovering around that range, perhaps consolidating over the past few days. What's the way forward on Kotak Mahindra Bank from here on? Where do you see it go?
Well, generally being been in a private banking space has been in a quite surprising to me that it kind of whenever the stock gets an overbought mode, it goes for some time-based correction and then starts to move higher. And this is some sort of trajectory has been still been visible in the Kotak Mahindra Bank. To my understanding, the indicators from the overbought mode is getting correcting and it's going to be the kind of a time-based correction. To get the chances that a possible breakout only above that 1730 odd mark, if it started to trade above that, it's possible. So to my understanding, it would go quite, and being on the mildly on the positive bias, if we're getting in an entry range in the somewhere into 1680 to 1670, that would be a good entry range for the stock. But overall, it's looking likely that it would spend a lot of time between that range of 1680 to 1730 range, and possible breakout targets on the upside once we started to trade above 1730 would be possibly 1850. So to my understanding, it would be a quiet stock at this point of time.
Okay, that's the view coming in on Kotak Mahindra Bank. Pull up Mindtree. Remember, this was one of the top gainer in the December series, pardon me. You had both your large cap ID companies, TCS, Infosys inching higher in the last series, and even NIIT Tech and Mindtree saw some gains. Mindtree is up 2% today. Open interest is also up by about 17 to 18%. Last 1 month, the stock's given you returns of 15%. Amar Singh, would you build up long positions above the mark of 800 here?
No, not at the current levels, because technically 800 to 810, 12 is a very crucial resistance zone for Mindtree. And if you look at the charts on the daily or the weekly, yes, the trend remains positive and strong. However, if you look at the monthly charts, that clearly shows that the stock will meet with resistance around 800 and 810, 12 zones. So I would rather not buy the current level. So, but yes, the stock is positive. So any dips in the stock, any correction towards 780 odd levels can be used as a buying opportunity, because the stock now seems to have formed a very strong base coming around 760 odd levels. So on a dip, the stock definitely is a buy. Above, if it sustains above 810, 812 levels, yes, then the stock can rally towards 845, 850 levels.
Okay, we have some interest building up in Muthoot Finance. Well, at least one viewer has suggested that we should take it up. So let's address Muthoot Finance. And we all know that it's done, well, not only Muthoot, but Manappuram has done fantastically well off late, and it's been on a tear off late. In fact, a 12% rise, and there's been like one straight line upwards for Muthoot Finance. Currently at a 765, 766. Also, well, doing well in today's day of trade, advancing by around 1%. Navneet, your view here, would you buy even at these levels, or you'd want to wait until you see a little bit of a correction?
Well, it's a kind of a bull market stock whereby if you keep on waiting for the correction, you will never get it. So to my understanding, if you are a compulsive trader, if you've got a risk appetite, you can still chase on. But the only thing is that now the stop loss levels on the positional side somewhere in the range of 740 should be maintained. If that level has not been violated, to my understanding, it's been an overbought mode, but it doesn't look like that. Normally the stocks which are typically in an overbought mode continue to surprise you on the upside. So to my understanding, there's a greater chances that this kind of momentum it might carry forward for another round of an upside somewhere in the range of somewhere 800 levels as well. So to my understanding, I will still place a bet on the long side, and now positional stop loss should be in the range of 740 until that level has not been violated. The greater chances of merit on the upside is possible.
Okay, that's Muthoot Finance for you, and the gold financing companies have been doing well. Both of them trade at their record high levels. We've got a query from Bikash Pekare on YouTube. He wants a view as he has a position on the weekly expiry. He's holding 3 lots of Nifty of 12,250 strike. That's the call strike after paying a premium of 60 rupees. He wants to know if he should wait or sell now at the current levels. If possible, let's just pull up the 12,250 call of the weekly expiry. Amar Singh, what would you advise him to do? He's holding 3 lots here.
I would suggest that he should definitely hold on to the stock, because hold on to the index option, because the trend remaining positive. Yes, today's high is something which is important and crucial, and today's low as well. So trading above today's high would definitely mean that the stock that the index would rally further, and even looking at the short-term trend, that remains positive. So he should definitely hold on to his position.
Okay, guys, we've reached the end of this show, so I am going to take a moment to thank both our experts, Amar and Navneet, for joining us and taking us through their views on the markets and solving some of our viewer queries. For more updates on the futures and options space, don't forget to check our futures and options pages on BloombergQuint.com.
And with that, it's a wrap on this edition of the F&O Show. Thanks a lot for watching. Stay tuned to Bloomberg Quint.